Hi, everybody, and welcome back to the Orin Inc. exclusive podcast series with Paul Harris and Mickey Fulp, the mercenary geologist. Welcome, guys.
Thanks a lot. Good to be here.
Morning, Kay. Morning, Mickey.
Good to be in front of each other at the Vancouver International Metals Riders Conference.
Yes, we're sitting here at the wonderful Pan Pacific and sitting face to face, as you said, and having a good time here at the show. The weather right now is phenomenal here in Vancouver, so I think the spirits and the moods are lifted by that as well. I think if it would be raining, the mood of the people, investors present, would be a little different.
I think it surprised a lot of people yesterday. This conference started on Sunday and it was a full house. It was packed. It was a beautiful sunny day, 25, 26 degrees, and the auditorium was packed with people interested in the junior mining space. So to me, that's a bullish sign.
I think so. It's a smaller conference than what they've had in the past. They've revamped the conference, really focused around speakers and riders. I'm speaking, you spoke, Paul's speaking.
Yeah, I'll be speaking today as well.
Yeah, we all get our time on stage, and we have enough time to take meetings and look at some quality companies. There's 60 companies, more or less, on the floor here, and the quality is, although the quantity is smaller, I think the quality of the companies is altogether higher.
No, I think that there's a quality audience in general here.
Yeah.
From what I've seen.
This is a bunch of high net worth investors for the most part.
Oh yeah, no, I think companies and investors get their values, out of this conference. It's free to attend, so it makes a lot of sense. And one topic we wanted to discuss here today is, in general, the financing situation in the markets and the overall market sentiment here. Like we've discussed that briefly before it started recording, is the financing drought in this space, and whether it's seasonality or whether it's market saturation or maybe a combination of both. So I'd like to hear your opinion on that, Paul, maybe.
Well, I think so far this year there has been a lot of financing. Okay, you'll jump in with the figures in a moment, but so it does seem a lot of companies, a lot of projects, the better ones, the higher quality ones, have been financed, have money to undertake their work programs. I speak to a lot of companies. A lot of them are planning or undertaking sort of drilling programs. Some companies I've spoken to having their or in the process of their biggest drilling campaigns ever, which means that they've obviously been able to be very successful raising money and can aggressively attack their business plan. So I think there's going to be a lot of drill results coming out over the summer and into the fall season. A lot of companies are working hard to advance their projects quickly into a developing bull market.
Yeah, I would agree with that take. I'd also mention that the venture exchange has been somewhat in a malaise since before the PDAC. Volumes have been low. We've had 100 million share trade day in the last 6 weeks, and that was a blip on the radar screen. 130 million shares traded one day, and I think on Friday it was 75 million shares, and that's probably been average over the last month or so. Is it sell and may go away? The charts kind of indicate that. We show with our seasonality that the sell and may go away phenomena over the course of the history of the venture exchange, now 15 years, is a blip on the radar screen. It's a spike up and it's a spike down over the course of somewhere between 5 and 10 trading days. So I think we saw that in early May, and now the index is back around in the low 800s. I think what I'm seeing is what we're missing in this market. It came back for a while last summer and into the early fall, is the retail market. The retail investor is not in this game right now trading stocks. A lot of the trading going on, I think, is pros and insiders and positioning, as you say, for the bull market to come.
Yeah, and I think added to that with the GDSJ rebalance, a lot of the professional investors are adjusting their portfolios, making their bets, cashing out certain stocks to trying not to be left behind or caught out by that.
Yeah, I think that's a factor for sure. I think that factor is likely already baked into the market. It doesn't happen for another
It's
2.5
June 15th, June 15th,
June
yeah.
17th or 15th, something like
yeah.
that. So the smart speculator will have made his move. You know, there's no secret. We've known for a couple of months this is coming. You know, I can rant and rave about the GDXJ and the ETF that goes with it and how incestuous that relationship is. The GDXJ is a bit of a garbage pail of everything from advanced explorers to mid-tier gold producers, and it's a dog's breakfast, and I think it's an ill-conceived index that we probably shouldn't pay that much attention to when we're looking at the market and the health of the market.
I want to go back to one thing actually. A combination of low trading volumes, but also the over attractiveness of financings. So giving full warrants that are valid, you know, for 5 years at a very low warrant premium. Do you think that investors rather chase the financings than instead going into the market to buy that? Is that also one of the reasons the volumes are so low?
I've participated in a number of financing over the first half of this year. I bought some in the open market, and they were basically companies that weren't doing financing. So I think that's part of it too. But that's going to be the high level, high net worth investor, accredited investor,
the professionals, more or less,
and people
yes.
that do more than play this game
No.
or in a cursory fashion, if you will.
No, and one thing we've witnessed, and I'm going to be talking about that here in a couple hours at the conference, is the quality of the deal flow. You Paul, you hinted that earlier as well, is that the deals, it's like the lower levels, the bottom feeders are financing now, and we come up with a couple metrics to measure that. You have to take the management obviously out of the equation, which is a very subjective impression, obviously. And you look at the quality of the deals in terms of warrant premiums, how have they developed over the last 6 months, and also the amount of smaller financings in relationship to the bigger ones, so the sub $1 million financings, and we see a strong correlation there in terms of, you know, the quality of the deals, the trading volume, but also the overall market sentiment, if you want to say that. And thinking about, like, looking at the numbers overall, if you add seasonality to that, we're looking at a very grim summer in terms of deal flow. And actually just last Wednesday, our data analyst here at Orin Inc., Jared, sent me an email, Kai, I have nothing to log today. And that's a very disturbing sign, in my opinion, because it hasn't happened ever since I took it over, ever since last September. And that's, you know, he found some deal to lock afterwards, but
the deals I'm seeing right now, and I am seeing significant financings in the works, either as reincarnated companies, RTO, rollback sort of things, and the deals I'm seeing are not less than $1 million. You know, they're 5 to 6 million in tertiary financing, or 5 to 6 million in a revamped company with an asset that has significant ounces in the ground. The other thing I'm not seeing, and this is just personal impression of what I see for deal flow, is I'm not seeing any 5-year warrants. The better companies I've participated in, there's been a couple with a 1-year warrant, a 2-year warrant, a half warrant.
No, that's another sign of quality of the deals.
Exactly.
That's something,
so
you know.
I personally hope for the health of our market, the 5-year warrants are a thing from 2015 and 2016 perhaps, because I don't think those sorts of things will ever be done in a healthy market.
No. I think that's a good point to end on in that regard. So I think that we should finish our podcast, our quick interview series here with, as Paul suggested, the number of the week, or the number of our bi-weekly series here. And Paul, why don't you start with your number of the week?
I'm going to venture, this is going to be the biggest number we ever have, 800 billion.
Explain.
And that's the market cap of Apple now. which compared to the natural resource sector, dwarfs it. One company got a higher market cap, multiple times bigger than the natural resource sector.
Yeah, it's got a GDP higher than the majority of, or it has a market cap higher than the majority of GDPs in the world.
Yeah.
That's a good point. So my number is 330.
330.
And that has to do with the talk I'm giving today. And that is
Copper
the
price.
copper price that is required, general consensus required for new copper developments to be financed
Okay.
and
Yeah.
proceed.
Yeah.
So that kind of tells you the all-in cost of producing a pound of copper is somewhere less than that price. Let's
Yeah.
say $2.75
Yeah.
worldwide to produce a pound of copper would be my all-in cost.
Yeah.
So,
I just want
which
to.
means to me the copper price has to go up.
Yeah.
I asked a similar question to a couple of the silver companies. What would be the equivalent magic figure for silver? And it's typically sort of 25,
25 even.
22,
Wow.
25. Yeah.
Interesting. Okay. Well, to end things, I hinted at it earlier. I mentioned it earlier, but for me the number is 0. I was so shocked by that email last week from Jared, my data analyst, that 0 deals or 0 private placements were there to log for him. That I had to choose it as my number of the week. So,
Okay.
and I think that's the bombshell we can end this interview today at.
800
And,
million to 0.
Yeah. I was so shocked by that, and I think it's going to, if seasonality comes into play, we're going to see a very low average number of deals being done. I think the week ended on 35 deals last week, but we had that very weak Wednesday on it, and the Victoria Day holiday in Canada as well. So,
And Memorial Day today in the U.S.
Yeah.
U.S. market's closed today
so
too.
no, Mickey, Paul, thanks again for your time, and always a pleasure having you guys join our interview series. Thanks so
Thanks
much.
a lot.
Thank you very much.